This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Thursday morning, and it's a better morning as compared to the mornings we've been having all of the last 3 or 4 days. We're waking up to better global cues. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, good morning.
Good morning.
Hi, good morning, and we officially have the World Cup, kicking off today, right? There's so much. The energy is really good. I think India plays on Sunday.
Yeah, India plays on Sunday. Yes.
The
I think all the India games are on Sundays, right?
That's all the big boys there, the ICC World Cup, and since it's happening in India, we all know that the hype is real this time, right?
Yeah, absolutely. Hope to get to see one of the games, Sonia, but it'll have to be only in Mumbai because can't go out of Mumbai, right?
On television, guys. I mean,
At home.
By the way, talking about sports in the World Cup, the Asian Games, right? Outstanding performance, and I think 18 goals in total, I was reading. So it's just incredible. I mean, of course, yesterday, Neeraj Chopra, the relay team, and I think it's just been a fantastic haul. I think the best ever. The last one was 16 goals, and this one that was in Jakarta. This is 18 goals in total, 81 medals. And I think today is also, although there are not that many medal events, but there is squash, there is, I think, badminton, and a couple of others as well. So it's been pretty good going.
India everywhere.
Yeah.
Preferred market, doing well in sporting action, and now the World Cup as well, hosting the World Cup. So feeling good about it. About this
power, right?
Yeah.
In every possible way.
Absolutely.
But what about the market? I mean, there's a little bit of a recovery that we've seen flow through, but still markets have been a bit tentative.
At least the start is going to be a little better, and then we'll have to pick it up from there. So, let's just actually begin there. We've got a bit of a better kind of handoff from Wall Street, and this is happening after some time, and that's why we're calling it a relief, right? Otherwise, you wake up to yields which are higher, dollar which is rallying, and markets in the US which are down. So this morning it's a little different. You've got the Nasdaq, which actually ended about 1 1/3% up. The S&P was up about 0.8%. The big problem has been the 10-year, the US 10-year. That came off 6 basis points to about 4.73. But this is not just the 10-year. Across the curve, starting from the 2, the 5, the 10, the 30, everything came off between 6 and 8, 9 basis points. We'll put this data out again. But yesterday, in the last 60 minutes, we put out data going back, 20 years, looking at very sharp spikes in the Treasury yield, and then what happened subsequently. And we are basically at that level. I'm not saying that, with the 6 basis points, you will see another straight 50 basis points fall in yields. I mean, it'll be desirable if that were to happen. It may be a little zigzag, but you'd reached very, very sort of high levels in a very short time span. That was the point. We'll put that data out a little later again. Dollar index also pulled back a little bit, 0.25%. We are now under 107, 106.77 is where the dollar index is at. You had the private payrolls number which came through, the ADP number, and that disappointed. So data was soft. Data soft means that policy does not need to be hot. So 89,000 jobs added as compared to expectations of 150,000 plus. Now, the big data point is the monthly jobs data, which we'll only get right before markets open on Friday. Now, the ADP is not a great indicator of what the jobs data will show, but it's kind of raised expectations that the monthly jobs data on Friday will be soft as well, softish. I think we'll live with that, and not hot at least. So we'll see. At least that's the expectation based off this that we got last night. Oil prices, big sell-off. I mean, the worst in over a year in terms of that asset class, 5% plus sell-off. Fundamentally, I don't think very much has changed, and we'll have Manisha talk about this more. It's largely to do with positioning, etc. So 5% gone. From basically, from $96, $97, you're now looking at $86 in a very short time span. So, but that's good news, great news actually for a big oil importer like India. Now, just circling all of this back and tying it into levels, near-term support. Basically, the framework is that both the Nifty and the Bank Nifty have come down to August lows, right? We were talking about that retracement. I mean, 38, 50, 68, 78, all those retracement gone, and you're basically back at the starting point from where the August rally began. August 31st to September 15th. That was the big move, and almost all of it has been retraced on both the Nifty and the Bank Nifty. So for the Nifty, we got to at yesterday's low within 100 points of that low. So that becomes the support, which is the August low, which is 19,223. It's about 200 points away from where we are because we got a bit of a bounce as well. But that's the big number rather than looking at retracements, etc. On the way up, watch out for the swing high that we saw earlier this week at 19,726. Above that, a close above that, there is also, by the way, a retracement which coincides with this 19,726 level. I think above that, you'll start to see some confidence beginning to come back. Again, it's a little further away from where we are, but you need to traverse that distance. Same kind of setup and same kind of thinking for the Nifty Bank as well. Support comes in. By the way, the Bank Nifty at yesterday's low came within 20 points of August lows. So, the support comes in, which is the August-September low. I mean, in the case of the Bank Nifty, the low happened on the 1st of September, not 31st of August. So that is 43,830. That's the first level. And then you got to go all the way back to the lows that we made in June, which was 43,345. That's the broad setup that we're working with. Hopefully, the August low which was only 20 points away, will hold, and we don't need to look at lower levels. The high on the Nifty Bank, which we need to cross, is 44,755, and that should act as a bit of a resistance. The GIFT Nifty will come up on your screens, and I would say, although the backdrop and the setup, etc., is positive, and it's possible that you get a bit of a bounce which expands during the course of the day. Watch the first, I think, half hour, 40 minutes. You're in a much better place if the market opens flattish or slightly lower to take those long positions, and then watch what happens very closely because, the big driver for global markets has been US yields, and that will depend on data. And we got lots of data lined up today, and of course the big one, which is the jobs number on Friday. You want all of those to align, and then maybe we can say that this sell-off that we've seen, which has taken us all the way back to August lows, perhaps we are putting that behind us. Sonia.
Absolutely. I mean, for now, the big headline really that we're focusing on this morning is the sharp fall that we've seen in crude prices, right? And that is a big tailwind for our market. It's a positive for our market. So I think the street is going to look at it that way. Brent crude has fallen to $86 a barrel. That's because weak demand is what we've seen as far as the US data is concerned. We'll come to the kind of impact this would have on individual stocks, but that is the big positive that our market is going to latch on to. Yesterday, the Nifty was at a 1-month closing low. And if you look at the US markets as well, not too bad. The Dow actually ended its 3-day losing streak. It was up about 120 points or so. The overarching theme is the resilience that the Nifty has showed in the last many days. So give and take everything, the Nifty has hung on to that 19,400, 19,450 level. There was good buying by domestic institutions yesterday as well. DIs bought over 1,700 crores, while FIs sold about 4,400 crores. So the selling pressure from FIs continues. But, if you're looking at individual stocks, then all of these crude sensitives will definitely be on your radar. Asian Paints is top of mind for me, because the sharp slide in crude prices is a positive for Asian Paints. 55% of the company's costs comes from crude. So I'm expecting a bit of a rebound in some of these crude-sensitive stocks, whether it's paint companies, whether it's aviation companies, tire stocks as well, may be in focus on the upside. But apart from that, the market will, sort of take heart from the fact that there are some positives to latch on to today. But let's see how the day progresses.
Well, Sonia, the texture of the market is going to get tested today because you wanted some overnight positive cues, and you've got plenty of them. Whether it's the equity market, whether it's the bond market, or even the crude market. So the texture of the market will be tested today because today you have all the reasons to see a bit of a bounce. And if you don't get it, then in fact, you know that we're going to be drifting down lower to around that 19,000, 19,200 odd mark. The big question is, will the shots get squeezed out today? The global cues are positive. All the global cues that are coming in there, they're fairly good. The FI selling has picked up, but I'll tell you what, it's being absorbed. We've not seen a large correction on the Nifty. So that's one positive. And the bigger positive is they're net short on the index. That could be the much needed fillip that we're looking forward to. The Nifty Bank, though, that's the sore point in there. And that's not participated. And yesterday you had signs that HDFC Bank wanted to participate. And in fact, in a market that was actually under pressure, HDFC banks showed signs of coming back to life. We're looking at it on the fundamental as well as technical basis. That bank is going to be the important one that will drive the Nifty as well as the Nifty Bank from here on. On the Nifty itself, there was not too much open interest built up. But on the Nifty Bank, there was clear shorting out there. And the FIs, they continue with their shorting ways. Close on 14,000 short contracts is what they added. 2 shorts for every 1 long position. The heartening aspect, though, is they added some longs after close to around 7 sessions. You have, in terms of gross long addition, after 7 sessions, you had some long addition, though they continue to remain net short, with the positioning at around 75% or thereabouts. And just take a look at the chart. The last few days from 20,000 short contracts, you've gone to 92,000 short contracts. I recall in April, we went to around 100,000 short contracts, and from there we saw a big bounce. So them shorting is actually not such bad news, because the global cues, if they turn around, then you're going to get that bounce. Options data, 19,400 put was fairly active yesterday. The premium ended at around 33 rupees, but at the high, it was more than 80 rupees. The sense you got was there was some writing being seen at that level. So moving to the levels then, the Nifty yesterday's low, 19,330 becomes important. Also, there was writing at 19,400 put, so that's an important mark. On the upside, since we saw some bit of action at the 19,450 call, the premium was roughly around 60 rupees at the start of trade. So 19,510 becomes the first resistance zone, and then you're looking at the 50 DMA, which is at around 19,600. So we're starting off mildly in the green. The hope is that maybe we start more or less flattish, or maybe mildly in the red as well. And then you look to buy the dip. The texture of the market will get tested today. Your factors are in place to see the shots getting squeezed out on expiry day.
Okay, let's see. For now, the gift Nifty is, indicating a start in the green, but there are plenty of voices that we're getting this morning. So let's go straight to them. Mahesh Nandurkar of Jefferies says that their meeting with 35 funds in Europe last week suggests that investor positioning on India is just a small overweight. He says the US dollar strength and high US yields drive continued emerging market outflows. He adds that investors are taking time to absorb the new reality of investment-driven GDP growth. He says the multi-year capex cycle will mean that new stock leaders will arise. Mahesh believes that long-term investors should buy property, banks and industrials in this near-term correction.
Okay, well, this is Vikash Kumar Jain of CLSA who says that globally India remains the best two-year earnings growth story. He says after a roller coaster quarter, investor sentiment ended in the neutral zone as per their India Bull Bear Index. Moreover, he adds India's equity valuations versus bonds have remained unchanged and the metric is still shy of the warning reversal level. He says add HDFC Bank to the portfolio. And further, they've raised their overweight for banks as a sector. They also like energy but remain underweight on IT and the consumption theme.
Okay, well, the rupee, let's get you some views on that. The rupee closed at 83.24 yesterday. So here are some money market views for the day. Parul Mittal Sinha of Standard Chartered Bank says the dollar INR inched up marginally this week, driven by dollar strength and continued FPI outflows. She says probable RBI intervention, however, helped to smoothen the volatility. She expects the dollar INR to trade in a range of 83.10 to 83.35 in the coming week, amidst continued dollar strength and elevated oil prices.
Well, on bonds, Parul says that India rates continue to trade in a narrow range despite sharp rise in US Treasury yields. She says expectations of Indian government bonds being added to more global bond indices and moderating domestic inflation continues to support India rates. She adds markets are likely to stay range-bound ahead of the October MPC, where a hawkish pause is widely expected along with retention of stance and withdrawal of accommodation. She expects the 10-year benchmark bond yield to trade in a range of between 7.15 to 7.3%.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. But for the time being, we run you through the list, and there are plenty of banks in there. RBL Bank, PNB, Bandhan Bank. You also have Hero Moto, IEX, and Healthcare Global. They are all stocks on the back of positive news flow. While on the flip side, Marico, Navin Fluorine, ONGC, and NHPC will be reacting to negative news flow.
Okay, well, that's basically some opinion coming in across asset classes. Abhilash Narayan is Senior Investment Strategist, Group Wealth Management at Standard Chartered Bank. Abhilash, good to have you with us here. Good morning. Are we at the start of a bit of a meaningful cool-off in bond yields in the US, Abhilash, or you think that will depend very much on data like the monthly jobs number tomorrow?
Absolutely. I mean, if you look at the rise in bond yields we've seen in US over the past month or so, it has been very, very fast. And from a technical perspective, the rise in yields looks to be, overstretched, but clearly momentum is towards further rise in yields. So as you rightly pointed out, the NFP data coming out on Friday will be very, very crucial because, as we see, markets are looking at bad news as good news. So yesterday we had the ADP data, which was softer than expected, and we saw both equities and bonds rally on back of that. So yeah, clearly data dependent, but we think dollar yields are edging closer to their near-term peak.
All right. Abhilash, how are you feeling about equity markets like India now for the rest of the year?
Well, I think last time we met, we discussed that Indian equity markets are likely to be range bound, and that's what we've seen. Now, looking ahead, we think Indian equity markets are again going to be trading in a broad range because of a confluence of factors. So, on one hand, you have the robust domestic growth story, and that continues to be quite supportive, especially from an earnings perspective. But if you look at the flip side, valuations continue to be expensive relative to other emerging market countries. That has been a consistent story. But when we think about the upcoming elections in 2024, there is a risk that we see a bit more outflows from foreign investors. And while we have seen crude prices decline over the past few days, they still remain relatively elevated, and that is likely to put further pressure on India's current account. So modest upside bias, but it's going to be choppy trading ahead for the next few months.
Choppy times indeed. Abhilash, good morning. Give us here, what kind of levels are you looking at on crude? The last time we chatted, we were saying $90 a little bit distance away. We visited, the higher 90s and we've cooled off from there. So what's the call on crude? And more importantly, the RBI rate cut, that was being spoken about towards the end of this year. That's clearly got pushed back a little bit. So what are you expecting from the RBI?
Yeah, if you think about oil, we think in the near term, oil prices could hover around $90 per barrel, in a range around that. And that's primarily being driven by, the production cuts we've seen from Saudi and Russia, which are expected to continue till December. But if you think about the next 12 months, we think there's a good chance that oil prices come down towards $75 per barrel because we expect the demand from US and Europe to actually subside as economic growth slows down there. And we've started to see signs of a lower petrol or gasoline demand coming through from US. So that should push oil prices modestly lower, but we are unlikely to revisit $50, $60 barrel range anytime soon. As far as RBI is concerned, obviously the spike in food inflation has been the big driver. We think that inflation in print next week could be below 6% as food inflation has ebbed a little lower. But it's unlikely that we'll see a rate cut till maybe Q2, Q3 next year. So RBI is going to be data dependent. So a pause tomorrow probably with the option open for future rate hikes if needed.
I mean, it's quite something, right? Going into the RBI with oil near 100 as opposed to oil a little further away from $100, right? I mean, it's obviously they look at a longer term price data and what's happened over a period of time, etc., not just what's happening day to day. But it's got to have it's a powerful thing. So you think it's a pause, right? With the stance maintained here by the RBI?
Yes, so we expect RBI to be on a pause tomorrow. I think from a messaging perspective, they'll say that they are looking at the data and they are open to hiking rates further if needed. So they'll keep that option open, but maybe the current level of rates is the peak for this cycle if data pans out as expected, and maybe they start cutting rates around mid 2024.
Okay. All right, Abhilash, we leave it at that. Thanks a lot for joining in and appreciate your thoughts here on CNBC TV18. That's the word coming in from the global expert. By the way, the big headline this morning, of course, is a softening of crude prices. We'll talk more about that on the other side of the break. Our list of top 10 stocks is lined up in just minutes from now. Stay tuned. Welcome back. Well, the markets are expected to stage a recovery this morning, led by supportive global cues and a fall in crude prices. But plenty of stocks to talk about, so let's get straight to it. Mangalam is joining in first up to tell us why he's watching Marico this morning. Mangalam, over to you.
Good morning. So Marico reported their Q2 update yesterday evening, and it's a bit of a mixed bag because the top line growth is still soft. Margins, however, continue to be strong. It's more of the same what was in the first quarter itself, and that's as far as the demand conditions are concerned. They said that demand was largely similar to what Q1 was, and they expect recovery only in the second half of this year. It will be interesting to see where that goes. Domestic revenues for them were lower. At the same time, the volumes grew in low single digits itself. Though they expect gross margin expansion, some of that would be replowed back into ad spends, and as a result of which, operating profit is expected to grow in double digits. So that's a bit of a positive. However, if you look at their segments as well, the Parachute, coconut oil, as well as Saffola edible oils have seen low single-digit volume growth, low single-digit value growth in their value-added hair oils business as well. So after the stock rallied after an ICICI upgrade a couple of days ago, it's expected to cool off a little bit in today's trading session.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Sonal. She's here to tell us about Naveen Fluorine. The stock has been in focus post those resignations, and yesterday there was a con call. Sonal, how are you reading it?
In the con call, the chairman or the board allayed fears around MD's resignation and what would the growth path be next for the company as well. They said that currently search is underway for a suitable replacement, and ongoing projects, they won't be impacted because of the MD's exit. In fact, they are focusing on capital discipline as well. They said company is expecting to execute current and upcoming projects seamlessly, and customer relationships should also not be impacted, especially with innovators as well. So they tried to calm investor concerns as well. The management is also working with human resources when asked about the top-level management exits that we've been seeing recently, and company also wants to raise equity in order to achieve capital discipline. While they did try to allay these concerns, the street is still concerned about the new MD stepping in and doing the same kind of capex and growth that Mr. Welling did. On the back of this, Jeffrey says that current circumstances make it difficult for company to raise equity. They've cut their EBITDA estimates, and there's a sharp cut in their target price as well to 3,625 rupees a share. They've downgraded the stock to a hold as well. Nirmal Bang says that this is a buy, but the target price has been revised to 4,600 versus 5,000 earlier. So till the time the new management is in place, there could be some uncertainty with Naveen Fluorine and the stock as well.
All right, uncertainty on Naveen Fluorine. The stock also could be volatile. Thanks, Sonal, for that. Let's go across to Abhishek. There are some more banks that have come out with their business updates. Abhishek, what are you looking at?
Well, to begin with, RBL Bank deposit growth YOY is the best in last 8 quarters and sequentially the best in last 6 quarters. So deposit growth is at 9.8% YOY and about 1.7% sequentially. CASA momentum has been weak like we have seen for others. So CASA ratio has declined both YOY and quarter on quarter to 32.1% when compared to 34.5% in the same quarter last year and about 32.6% in the previous quarter. Advances growth is feeble over here, just 10.3% YOY and about 1.2% sequentially. There is improvement in CD ratio on a sequential basis, which could keep or help the net interest margin remain stable. PNB, the weakest loan growth YOY and quarter on quarter in last 5 quarters. However, the net interest margin could surprise positively. So deposit growth is at 9.65% YOY and about 0.8% sequentially. One of the rare bank to see CASA ratio improve on a sequential basis. Advances growth is at 13.8% YOY and 3% quarter on quarter. So CD ratio has improved both YOY and quarter on quarter, indicating that the net interest margin could remain healthy versus the previous quarter. So Bandhan Bank net interest margin can improve. They have seen improvement in CASA ratio and shrinkage or decline in bulk deposit as well. So deposit growth is at 12.8% YOY and 3.3% quarter on quarter. CASA ratio has jumped up by 250 basis points quarter on quarter. Bulk deposits have declined by almost 7% sequentially. Advances growth is at 12.3% YOY and 4.3% quarter on quarter. So there is improvement in CD ratio sequentially, which could help the net interest margin remain healthy. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, Sonia, you're looking at Hero MotoCorp, and bike lovers like me are getting spoiled for choice.
Yeah, they are. And you know, their flagship motorcycle, the Charisma, right? They had launched it way back in 2007.
Yes.
And then they came out with some cosmetic changes in 2011. They've revived that brand, the Charisma, and they've launched it again. And they've received a very handsome, almost 14,000 bookings is what they received for the Charisma, the new Charisma XMR, that is. Now, if you look at it, the deliveries of the Charisma will commence from this month. It's a 200cc bike. And of course, you know, it's in this space which is really picking up pace right now. If you look at, I mean, the pricing is around 1.7 lakhs. So if you look at the stock price itself, it's come back into action in a big way. In the last 6 months, the stock is up about 25 odd %. It is not too far away from its 52-week high, about 8% away from its 52-week high. So yeah, this is a segment that's coming back, a bike that is coming back. It reminds you of the 2007 time. We're back there.
No, it was a very good bike at that point
Yeah.
of time. I recall riding a black color one. Looked very, very good. Anyway, so
2007, that time also was very nice.
time was
We were
beautiful.
younger.
College days.
At least I was a lot younger and doing a lot of things.
On bikes.
Anyway, well, we don't want to go there, but we've got IEX and HCG in focus. Vivek is here with details on these two. Vivek, hi, morning.
Well, good morning. IEX is on our radar given the fact that it was an unseasonally hot summer and even the unseasonal rains have kept the short-term power markets very excited. So volumes, for the month of September, very high, up 13% on a year-on-year basis, coming in at 9,147 million units. The volumes for the quarter two have jumped up by 15% on a year-on-year basis. The day-ahead market, the key segment of IEX, the average clearing price has come in at 6.23 rupees per unit, which is up 11% on a year-on-year basis. Now, what the company is saying, going forward, the demand momentum in August 2023 has continued in September, and also three important triggers, the general network access, the Indian electricity grid code regulations, as well as, the transmission charges. All of these have commenced from October 1st. The company says all of these are important triggers and will push further volumes onto the short-term power exchanges. The next stock on our radar is Healthcare Global. The company has done two interesting acquisitions in Indore. Number one, the company is going to acquire a cancer care center from SRJ Healthcare and also going to acquire radiation business from Amrish Oncology Services. Along with that, the company in Indore is going to expand its operations by 100 beds and add cancer as well as the diagnostic treatment facility. And all of this that the company says will be done in the next 2 years. So an interesting acquisition from Healthcare Global.
Okay, thanks a lot for that. Well, the big headline, of course, globally is the fall that we've seen in crude prices. Manisha Gupta is here to give us the latest on that. Manisha, over to you.
Well, thank you for that, Sonia. Even as we've been looking at $96 a barrel in case of crude oil prices, it was just last week. We've been saying that it has been overbought because we've seen nearly 28% of gains in the third quarter for the crude oil prices. So this profit-taking wasn't coming. The hedge fund long positions have been the highest in 3 years. So they've also gotten into some profit-taking and liquidation here. If you look at the prices, we've lost 5% overnight. It's an 8% of a decline for the crude oil prices in this week. And with this fall at $86 a barrel, we are trading at a 1-month lows in case of crude oil prices. Well, three major factors. One, you saw the U.S. gasoline stocks build up in the biggest way in 2 years. That tells you that the U.S. demand is slightly on the lower side. The heating oil prices also fell by nearly 5%. We also are looking at Russia lifting diesel ban in coming days, and that has weighed onto the market. And then OPEC and allies made no changes to the group output policy. That also led to some profit-taking coming in for the prices.
Okay, all right, Manisha, thank you very much for that. So that's basically the big drop that we've seen in oil prices coming through. NHPC is also perhaps going to be in focus. We've seen, real bad devastation because of the flooding in Sikkim. Some of the very large hydro projects in that state have also sort of borne the brunt of the onslaught, the fury that the floods have brought forth. Vivek is standing by with a quick update. NHPC perhaps should be in focus today. Vivek.
Well, you're absolutely right. The unfortunate flooding situation in Sikkim has caused significant issues across all of the hydro projects that run along the Teesta River. Now, NHPC has two projects, that are upcoming as far as this particular riverbed itself is concerned. The first one is the Teesta Fry project, which has a capacity of 510 megawatt. That particular project has seen radial gate damage, and at this point of time, it is uncertain as to when the operations can start. The other project is Teesta Stick. This particular project is under construction, and the operational date estimated was FY27. Again, that too is going to be delayed. At this point of time, what is important to check is that most of the companies typically have insurance coverage for the upcoming projects and the projects that are under construction. So we are waiting for a statement from NHPC, indicating assessing the exact extent of the damage and what are the claims owed to them.
All right. Well, here's a quick recap of our top stocks with positive news flow. There's RBL Bank, PNB, Bandhan Bank, Hero MotoCorp, IEX and Healthcare Global. While stocks with negative news flow, there's Marico, Navin Fluorine, ONGC and NHPC. Let's take a short break. Up next, market expert Hemang Jani will be joining in for some fundamental stock analysis. We'll also connect with Pratik Jain of PwC and MS Money of Deloitte to talk about expectations from the GST Council meet on the 7th of October. Do stay tuned in for that.
Welcome back. Well, if you're just tuning in, then the news overnight is the US markets ended higher. You had crude oil prices that cooled off, and the yields as well cooled off a wee bit. Well, let's focus on a couple of stocks, though, in this sort of a backdrop. We have Hemang Jani, market expert, who joins us on the show. Hi, Hemang. Let's talk about the big fall in crude oil prices first up itself. Some of these pain companies, because they have their input cost is crude derivatives, they've been under some pressure. Do you see them bounce back from here on, given the sharp drop that we've seen in the last 3 sessions in crude?
Yeah, good morning, Nigel. I think surely the cool off in the crude oil price has been a relief for the market as well as some of the companies, paints, tire, and many other companies where the crude oil is the raw material. But what is very important, I just to understand is that the prices need to really stabilize at a certain level where one can really get a little bit of comfort. Because when you see the swings or the volatility, I don't think that by itself is going to give any direct benefit to the paint companies per se. So my take is that let's watch out for the quarterly updates, what sort of volume growth these companies report. And once we have a slightly more color on the oil price, that is when we should really take a view on the paint companies. So in the meantime, I think one should, take a little bit of a cautious stance at this point of time. Yeah.
Okay. By the way, Macrotech Developers is another stock in focus. The Q2 business update has come through. It's flashing for you on the screen. It's not bad, actually. The collections have gone up 16%. Pre-sales are up 12%. But I think what the street will definitely like is the fact that the debt of the company has come down substantially. Hemang, hi, good morning. The entire real estate space is doing very well, whether it's Macrotech. Soba just came out with their numbers a while back too. Prestige has been doing well. From this entire lot, anything that you like from a long-term standpoint?
Overall, outlook on the real estate sector continues to be positive. It's very remarkable to understand is that despite the higher interest rates, we haven't really seen any slowdown in the new sales or the overall excitement which is there in the sector. And the new project pipeline also continues to look good. So I think Lodha, DLF, some of the Bangalore-based companies like Brigade, Prestige. I think these are the names where we continue to have a positive bias.
Continue to have a positive bias there. What about, hi Hemang, good morning. Names like Suzlon, we don't talk about, but it's done very well, right? Almost 28 rupees now, and it was up 5% in a down market yesterday. The story is real. The government said they want to add the stated aim is to add 10 gigawatts of, wind power capacity every year annually. And Suzlon, I remember speaking with a company and saying that before, the entire thing went into a bit of a tizzy, they used to have a 30% share annually. The market seems to want to believe that good days are back again. What would you do here?
Yeah, so Prashant, typically, these kind of companies will do well in a certain phase or when a theme is playing out well, where some people want to put a small allocation towards high beta, names. And the company also has done a reasonably good job in terms of repairing the balance sheet, getting fresh money. There are some real good, credible investors who have come into the company. So from a technical point of view, when you see the this entire solar story playing out well, people would want to participate. But given the track record of the company and how it is disappointed on many occasions, now that it has already run up, I think we would stay away from it at this point.
Okay, just stay on. We'll come back to you in a bit. We also have the other big headline, which is the GST Council will be meeting on the 7th of October. Sources say that the council is likely to deliberate a proposal to levy 18% GST on corporate guarantees extended by holding companies and subsidiaries. Also, there may be some relief for liquor companies with GST on molasses likely to be slashed to 5% from 28%. Pratik Jain, partner at Price Waterhouse, and MS Money, partner GST at Deloitte, join us now to discuss about the likely agenda of the GST meet. Mr. Money, let me start with you. What tops your list this time around? What is the expectation?
I think what you mentioned in respect of corporate guarantees is something where there is certainly a need for clarification. I'm not aware of whether it will get taken up or not taken up, but this is something which we need at some point of time. Because in the last few months, we have seen GST audits for periods starting from 2017 starting. And in many of these audits, the issue in respect of corporate guarantees issued by a large company to its subsidiary or to one of the group companies invariably gets picked up. And to me, the question is not an 18% being levied. The question is, should it be levied on a presumptive basis? Because in most of the cases, there is no amount that is charged between the two parties. A group company gives a guarantee to its smaller company or someone who needs that guarantee, largely because it's part of the same group. So when there is no commercial transaction between the two entities, how can a GST be levied? Because GST is levied on the value. So here there is no open market value also which is available. So ideally, there should be no GST on this. But if it is felt that there is a need for a GST, then I would say that similar to the provisions that we have for transfer pricing and income tax under the safe harbor rules, we should have some kind of a presumptive tax over here. It can be on 0.5% or 1% or 0.1%, which is treated to be the value, and on that value a GST is levied. This will inevitably lead to situations where the recipient entity is unable to take a credit, either because it is exempted or it is an NBFC or any other reason. So either it is not able to take the credit or the credit is restricted, which will lead to a credit loss. And that is the reason, ideally, in respect of corporate guarantees, there should be no GST because there is no commercial value to the transaction. And if there is a need, it should be done in a very calibrated manner so that there is no credit leakage at any point of time.
Okay. Gentlemen, good morning. Prashant here. Mr. Mani, what is the size of how large an issue is this?
It's a fairly large issue, Prashant, because most of the corporates keep issuing guarantees to their, subsidiaries, smaller companies which don't have a very strong balance sheet, etc. And it's part of a normal business transaction. I mean, if I have a large organization and a small organization, it's perfectly fine. It's my business decision that my large organization gives a guarantee to the small organization, to an external third party. And as long as I don't charge for it, to me, there is no GST play in this. But if there is a need for a GST play perceived by the policy makers, it should be very clear on what value it is to be, levied. It should not be the way it is done, where the issue is getting picked up in every single audit that we have seen.
No, our notices have already been sent out on this?
These are part of the audits. These are the part of the audits. So audits go through a certain cycle. So there is a pre-consultation notice which is issued, and then there is a final notice that is issued. So this is already figuring in many of the pre-consultation notices.
Okay. All right. Got it.
All right. Pratik, wanted your comment as well on this issue, and how do you see things playing out?
So Mani has already said, right? So notices have been issued to a lot of companies already. It is an issue which has come after GST has come in, right? Because before GST, service tax was there, where free of cost transactions were not liable. Under GST, even if it is a free of cost transaction between related parties, it is liable to GST at 18% in this case. The issue is wherever credit is available, not a problem, but typically corporate guarantees are issued in large infrastructure projects, power, construction, and so on, where credit is not available because there's no output tax there in many cases, and hence this 18% becomes a cost. The real issue, so there is a debate whether it should be liable or not because it's a shareholder's function, right? Because I am a holding company, I am giving a corporate guarantee on behalf of my subsidiary. Now, is it my shareholder's function and hence not be taxed, or is it really a service which I am providing to the subsidiary? So that's really a debate. Now, if the government feels that it should be taxed, it should be taxed prospectively, to my mind, and they should provide an exemption for the past period. And B, as Mani says, it can't be equated with bank guarantees because bank guarantees are different in concept. There is underlying asset, security, and so on. It should be a fraction of the percentage that bank would charge to provide a guarantee, and therefore some more engagement with the industry is necessary before you actually put a clarification saying it's liable, because the value at which it is has to be paid has to be seen. Otherwise, it become a cost for the industry, right? So it's going to be a significant cost.
Okay, so you're saying that corporate guarantee should be taxed prospectively, not retrospectively. Anything else, Pratik, before we let both of you go? Anything else that we can expect from the meeting?
One, there was a group of ministers which was set up for rate rationalization a couple of years ago. Now that group is not functional because the chairperson is not there. So now that group has to be reconstituted. We need to start that process of rate calibration. We have 5, 12, 18, and 28. We need to collapse these 4 rates into 3, and we need to start having a debate on that. So that's one expectation that I have from this council meeting.
All right. Okay, gentlemen, thanks a lot for joining in. And we won't have to wait too long. Day after tomorrow is when the GST Council meeting takes place. So we'll get more clarity that time. Let's take a quick break. We have a market to trade. Mitesh Thakkar, Sudarshan Sukhani will join in for some technical trades in just a bit. Stay tuned.
Okay, welcome back. There's 13 minutes to go for the pre-open session. The GIFT Nifty is indicating a 35-point higher start. Hemang Jani is still with us with what he's making of things. Hemang, you saw that news on the massive price cuts on pizzas, Jubilant FoodWorks. Any thoughts on Jubilant FoodWorks? Huge underperformer, but this QSR space itself has been doing pretty poorly over the last few years. There is this World Cup upon us, and that I think should give a bit of a boost to the space. But what's your sense?
Yes, so Prashant, surely this price cut has come as a bit of a negative surprise, even the challenges that the companies are facing from the smaller players, particularly in the Tier 2, Tier 3 cities. But I think the fact of the matter is that this entire space is actually growing at a very, very good space. And even if they take a price cut, the fact is that the operating profit margins would continue to be very high. So I think as long as the volume growth and operating margin picture remains reasonably good, one should not get too negative on the space because of the huge opportunity ahead of us, whether it's World Cup, festive season, and the overall story which is there. So both Jubilant, Devyani, we continue to have a positive bias.
Oh. All right. Stay on. We'll come back to you. We have Mitesh Thakkar and Sudarshan Sukhani who are joining in now to tell us how to approach the markets today. Sudarshan, good morning. This market is really all over the place, right? Yo-yoing around that 19,500 mark. What do you see as the trajectory for today?
Yeah, good morning. See, yesterday the markets bounced back from the lows that it had made. When I talk of the market, I mean the Nifty. So that was an attractive proposition. The Nifty held on to its lows created intraday. So there may be a buying opportunity for the day in the Nifty. Keep a tight stop, let's say 19,380, and then see if you can go in long in it. But the Bank Nifty doesn't have the same chart pattern. The Bank Nifty, apart from the fact that there is a news event, it's a complete avoid. For the Nifty, I would suggest taking a probing buy.
Okay. Yeah, I mean, send a probe in, and that's a good way to put it, right? Test the waters and start small. Gentlemen, good morning. Mitesh, what's your sense? Do you think we get a slightly higher start, tentative kind of start, but do you think we'll be able to build on it, or we'll need a few more days for clarity to emerge?
Morning, Prashant. So I still believe that the risk of market decline hasn't gone away. The Bank Nifty is at a very critical level, 43,800, 43,500 zone. But the structure of the indicators is negative. So while we might get a bounce back today, maybe it might continue till tomorrow. My overall belief is that there is a good chance of us eventually declining and testing the August lows of 19,200 for the Nifty. And this time a fresh low for the Bank Nifty could happen, which could be as low as about 42,200 to about 42,500 zone. So I would be negative. So therefore I would not want to play on this bounce back, but closer to higher levels. Let's say closer to about 44,400, 300 zones, which is about 350 points higher for the Bank Nifty. I would want to venture into some short positions.
What about individual stocks? What are you looking at, Mitesh?
Yeah, on the stock side, I have 2 buys and 2 sells. Couple of stocks with this decline have come to very important support levels. A bounce back is at least what I'm looking at is Bajaj Auto. That's a buy with a stop at 4,875. And let's look for a price target of around 5,000, 5,010 to begin with. Similarly, Grasim, which gave a breakout, made a fresh swing high, gave a pullback in the last few days. Now can be bought with a stop just below yesterday's low of 1877. And a first target of 1935 is what I would look for. On the sell side is Maruti. Keep a stop at 10,305. Look for targets of 9,700 or thereabouts at maybe slightly lower levels eventually. And a sell on M&M Finance with a stop at 295 for a target of around 270.
All right. And Sudarshan, how about you?
Well, I have more buy ideas. One of them is BEL. BEL has been having 3-4 good days recently. It's bounced back from a very small correction. It's a buy with a stop under 136. Bharti Airtel is also a buy. It corrected and then the lows that it made 5 days ago are still holding. It's much higher than that. So it's outperforming the Nifty. Bharti Airtel is a buy with a stop under 910. Chambal Fertilizers is my only intraday short. The stock is giving signs of a large distribution. Stop above 276. And Hind Unilever had a very good day yesterday. it's also building a small base. It's very small, but still it's there. So consider buying with a stop under 24.90.
Okay, all right, gentlemen, we'll leave it there for now, but we'll have you back soon for more. We'll take a quick commercial break here. Up next, the pre-open session will be upon us, and we'll also have the financials analyst of Bernstein to talk about all the second quarter pre-second quarter updates which we're getting from banks and NBFCs. So that conversation lined up next. Stay with us.
Welcome back. Sneha Seth, who is a derivatives research analyst at Angel One, joins us now to give us some cues in the F&O space. Sneha, hi, good morning. How are you feeling about the market now? What are the levels to watch? And what are you looking at in terms of individual stocks?
Good morning, Sonia. If you see market yesterday, we saw some recovery from the lows of 19,350. So I believe for now, 19,300, 19,350 is the important support to watch out. And on the higher side, any recovery beyond, say, 19,550, 19,600, that would be interesting. And that will bring back the confidence in the market. So these are the levels to watch out. As far as individual counters are concerned, I have one buy call on Ramco Cement. If you see, this counter has shown decent strength yesterday, and I believe we can go ahead and long this counter with a fixed stop loss of 980, and the target which you can expect is around 978. Apart from this, I'm liking Jindal Steel for a short. So I would recommend buying a put option here. 670 put options of October series in the range of 15.5. The targets would be around 27, and the stop loss which could be maintained, that would be around 9.
Okay, Sneha, thanks so much for stopping by and filling us in with your take on the markets as well as on the couple of individual stocks that you just discussed. But let's move on. The talk of the town has been the US yields amid the sharp moves. Prashant, well, he collated some data, interesting data, and very relevant to revisit it this morning. Prashant.
Nigel, we presented this yesterday afternoon on closing bell, and the idea is very simple. The US 10-year bond yield has rallied 130 basis points, excluding yesterday what happened last night, in the last 3 months. So we went back last 20 years and looked at periods where we've seen at least 100 basis point move in US yields in a short time span, 2 to 3 months, to understand what happens after that. I mean, do things keep going, or is there a bit of a sell-off? And the answer is that the latter, which is that there is a sell-off. So here are the instances where we saw a very sharp move. September 2003, we got a 140 basis point rally in the US 10-year into September 2003. So this move came in 3 months' time. But after this, from September 2003, over the next 3 months, we saw almost half of those gains being given back. The rise in yields being given back. June 2004, similar kind of picture. I mean, this was actually almost complete retracement. June 2009, 120 basis point move. And then a 60 basis point sell-off. February 2011, you have the data, 114 basis point rise and then a 78 basis point give back. And then, of course, there is more recent stuff as well, which is 2013. This is, of course, the taper tantrum, the famous taper tantrum where the rupee sold off. And it was mayhem all around. 117 basis point rise in yields, and then, of course, a subsequent sell-off. June 2020. This is the largest, right? This is last year fall, October 2022, where we had a 157 basis point rise in US yields, and then a very meaningful pullback as well. I mean, we put this out yesterday around market opening. US yields have cooled off a little bit, as we've, of course, been discussing over the last hour or so. The hope is that they will stay well behaved, and we will continue to see, yields cooling off. It's called the global risk-free rate for a reason, because it's an anchor around which interest rates around the world kind of are tied at the hip. So you want that to be lower and that hurdle not to be higher. We'd almost hit very close to the 5% mark, especially on the 30th. I think on the 30th had hit the 5% mark. And there is a bit of a cool-off, which is starting to emerge now. Back to you.
Okay, thanks a lot for that. Well, Hemang Jani is still with us, so let's get some thoughts from him going. So, since we're talking about a lot of the macro cues, Hemang, I wanted your thoughts on how you would approach this fall in crude. Because a lot of companies, right, Asian Paints, for example, has 55% of its costs comes from crude. So it's a big beneficiary of this fall that we're seeing. Would you buy any of these stocks, either paint companies, aviation, tire companies now?
Yeah, so Sonia, I think big relief, because of the way the price had shot up. Surely it would have, impact on the economy, the sentiment, and of course the specific companies like paints, tires, and so on and so forth. The question is how long, the prices remain at elevated level. Do we see big volatility or the gradual decline? I think that would be a larger, issue to deal with. And in the meantime, I think what we should do is we should really watch out for the quarterly numbers, particularly paint companies, tire companies, and then take a call as to really whether it makes sense to go for it or not. I think it might be a knee-jerk reaction or a little bit of temporary respite, but I'm not looking at this in a major way.
All right. We have, I think the pre-opening rates are just about kicking in. So we'll wait for these rates to settle. But at least the initial tick suggests that there will be a bit of a rebound. So whether we get back to that 19,500 mark, whether we stay there, that's interesting. But for now, looks like the start is going to be in the green, led by HCL Tech, ICICI Bank, Kotak Mahindra Bank, Tata Motors, all in the green right now, up about 1.5 to 2%. But Himang, just stay on. We have another guest joining in. The focus is on the BFSI space. Quite a few banks and NBFCs came out with their Q2 business updates. Pranav Gundlapalli, who's a senior analyst, India Financials at Bernstein, joins us now to discuss details on the Q2 performance for the BFSI sector. Pranav, thanks a lot for joining in. I want to start by asking about Bajaj Finance, because over there, the data looked good, but the stock was under a bit of pressure yesterday. How do you feel about it? And given that the stock is at a 52-week high, is there more scope for an upside?
Hey, morning. So I think you had pretty good numbers from all the banks and NBFCs that have reported the headline numbers so far. I think the weak stock reactions that you saw yesterday was largely, I think a factor of the macro concerns, etc. So you saw a wider sell-off, and probably not as much as driven by the updates that came in. Probably HDFC was the only exception. Now for Bajaj and a lot of the NBFCs, I think what is already priced in is that the consumer credit growth will continue. I think that's largely expected. And therefore, 30% plus growth is largely on expected lines. I think the bigger factor for the NBFCs now would be on when and how much the rate cuts would happen. And I think that's the part which had got priced in early in the year and now is looking less certain or looking further away in terms of rate cuts coming in. That's probably what is the overhang on the NBFC stocks for now.
All right. Hi, Pranav. Good morning. Nigel on this side. Pranav, Bajaj Finance is going to be raising some money as well. What's your best guesstimate about what they want to do with it? Plenty of rumors out there, maybe improve their ratios, maybe get them set for future growth, or maybe some inorganic growth. What do you think?
I think that for the core business, they have sufficient capital at this stage. I think it would be very surprising if they wanted to further shore up capital, and I think this is pretty much the case for most of the banks and NBFC. So it probably is for a different use, either for one of their subsidiaries if that has to get listed, or for any inorganic acquisition. Right. So I think it's unlikely to be for their core business.
Okay. All right. Got that then. Pranav, what about HDFC Bank? Yesterday after a while, that showed signs that it's coming back to life. Was it a blip, or is there more from here? How are y'all positioned at HDFC Bank around this 1,500 rupees mark?
See, HDFC remains our topic. I think what happened in the last few weeks was that with the recent roadshows plus the analyst day, I think the bottom of, in terms of expectations has been set, both in terms of growth and profitability. So I think they are well set to surprise on the upside rather than the downside. And I think yesterday was an example of that, where there was a lot of concern on the deposit growth, given what people had heard from management on the shift away from deposits to borrowings, etc. After all that talk, I think 18.5% growth in deposits came in as a pleasant surprise, right? So, and it was an upside surprise, and therefore you saw that reaction of the stock that you saw yesterday.
Pranav, hi, good morning. So what's the story from here going to be? I mean, what are you modeling in? It used to be a bank which used to grow at 30%, then that dropped to 20% for the last many, then that kind of gave way. What should we expect from HDFC Bank in terms of earnings growth going forward?
So I think our expectation is the earnings growth, once you have a few quarters of the merger-related impact normalizing, should settle in that 18 to 20% range again, right? I think, and that is dependent on the system growth staying at, 14 to 15 or 13 to 14%. So the way I think about it is the profitability part is going to remain steady. I don't see any big surprises there. They will very quickly come back to their long-term range of 1.9 to 2.1% ROA. And in terms of growth, the way I see it is they probably gain about 60 to 80 bips of market share every year. That's been what they've been clocking recently. So if you then assume a 13 to 14% system growth, they should head to that 17 to 18% growth in terms of asset base, and their ROA remains largely stable. That should drive a similar earnings growth for them. So that's where I see them settling at. And you will have a few quarters of noise coming in because of the merger, of course.
The two other stocks I wanted to ask you about, one is RBL Bank. The deposit growth has come in at a multi-year high, right? So that one's looking pretty good. And from the PSU banking space, there's also Bank of Maharashtra that did really well. So there was a growth of over 22% in their deposits this time. How are you feeling about these names?
So I think for a lot of smaller banks, I think they all benefited from excess liquidity. So there was no pressure for them to raise deposits until probably the last couple of quarters. So you will see a big surge in deposits. Now, I think the bigger question is going to be on how much that drives the NIMs down. Right? I think what we have seen is that the deposit supply is fairly healthy in terms of term deposit rates having gone up in the recent past. I think the supply is fairly good. So now it only becomes a question of, okay, you've got the deposits, now what happens on the NIM front? I think that's going to be the big, big factor to see in this quarter.
All right. Pranav, what about Mahindra Financial Services? What's the view out there?
So I think for a lot of the NBFCs I think our view is it at this stage has most of the upside factors that would have come in priced in. And with a rate cut, looking more distant than it did, let's say, 3 months ago, I think the immediate catalysts are probably not there for most of these NBFC stocks. Then, for individual like Mahindra Finance, which has a greater tilt towards a rural lending, then I think it becomes a call on if you will see a recovery in the rural spends, and therefore it drives anything special for these businesses. Whereas at a sector at large, I think that rate cut was the one that was highly anticipated, and that seems to be pushed out a lot more now.
Okay, Pranav, in your sort of coverage universe, let's just again go back to that HDFC as a question. Is it by far the most attractive name? When you think about what will make you absolute returns from here in that space, or do you think there are more sustainable and higher growth stories here in this space?
Okay. In terms of the large, universal banks, we do think it will be HDFC. And the reason I say that is the re-rating, which happened for a lot of the banks, either because of credit cycle and in general earnings growth being extremely high. I think that part is done to a large extent, both for the public sector banks as well as for the smaller private sector banks. And therefore, what happens from here is a very similar compounding, given that it's a benign credit cycle, a similar compounding across the board. And therefore, our topic is the one where we see a big multiple expansion story that exists. And that we think holds true for HDFC, which is why it's the topic. The other part that we see where we find it interesting is consumer lending, where we think that we are still in the early part of the cycle. While, yes, you've had, let's say, about 12 to 18 months of strong consumer growth, consumer lending growth, we think there is some more legs in that growth rally. And therefore, we like businesses like Paytm, which are almost entirely focused on the consumer lending side, and they become a clean proxy for a continued consumer lending growth. So almost like universal banks, it's going to be about deposits, multiple re-rating, or a pure play consumer. There's still growth left, and we like Paytm there.
Okay, all right, we leave it at that. Thanks a lot for joining in and giving us your view. So that's on the banking and financial space. By the way, the big mover, as we were suggesting earlier during our chat as well, is Asian Paints. This is the biggest mover right now, 1.5% higher on the back of the fall that we've seen in crude oil prices, the biggest nifty gainer. And apart from that, many stocks, the IEX stock should also come up for you. The business update looked pretty good. Volume growth of over 13% is what IEX has seen, and that stock is up about 2%. Sudarshan is back with us. Sudarshan, what's the big call at 9:10?
Buy BEL with a stop under 136.
And Mitesh, what about you?
I'll go with the buy on Bajaj Auto. I think that's the stock which is at a good support level, so we'll reverse. Keep a stop below 48.75. Look for 5,000 as the first target.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's revise a few stocks for you. Rima joins us to tell us about Vodafone Idea and Indus. Rima?
Thanks so much for that. So, Indus Stars has written a letter to the Telecom Regulatory Authority of India, TRAI, dated 3rd of October, and CNBC-TV18 has accessed this letter. We've seen a copy of the letter written by Indus Stars to TRAI, and some of the contents of that letter, which has been written by the MD and CEO of Indus Stars, will come up for you verbatim. Now, the key gist of it is that Vodafone Idea has been in continuous defaults of its contractual payments to Indus Stars. At times, the Vodafone Idea has paid other vendors over Indus Stars, and Indus Stars has tried to make some settlements, but despite that, Vodafone Idea has not adhered to this contractual, obligations. And as a result of this, Indus Stars' financial, operational, working capital ability has been severely hampered. In fact, last year, the company was not able to declare a dividend to its shareholders for the first time since history. So, Indus Stars goes on to say that they are facing financial and operational difficulties, and if Vodafone Idea continues to breach its payment obligations, Indus Stars will not only have recourse to all lawful remedies, but it could also be entitled to mitigate its losses by restricting its services for Vodafone Idea. They're not saying they will, but they're saying it is an option on the table, restricting services to Vodafone Idea if they continue to default on their obligations. They've also given an updated figure about the total receivables owed by Vodafone Idea to Indus Stars, and it stands at a massive 7,864 crore rupees. And this overhang of the receivables from Vodafone Idea has been one of the reasons why Indus Stars has been an underperformer in the last 1 year. The stock is down 7%. Back to you.
All right, Rima, thanks very much for that. RBL and PNB are the other ones. Abhishek is back with us with those two. Abhishek.
Well, RBL Bank, the business momentum has been pretty robust. Deposit growth of 13% YOY and about 5% sequentially. CASA ratio has declined both YOY and quarter-on-quarter in line with what we are seeing with peers. Retail deposit traction is good at about 19% YOY and 4% quarter-on-quarter. Loan growth pretty robust at 21% YOY and about 4.6% quarter-on-quarter. And CD ratio has remained stable, which could hint that the net interest margin could remain stable. PNB, weakest loan growth that you are seeing both YOY and quarter-on-quarter in last 5 quarters. However, the net interest margin could surprise positively. Deposit growth is close to about 10% YOY and 0.83% sequentially. CASA ratio has improved on a sequential basis. Advances growth is little less than 14% YOY and about 3% sequentially. And CD ratio has improved both YOY and quarter-on-quarter, indicating that the net interest margin could surprise positively. Back to you.
All right, thanks a lot for that. Well, Naveen Fluorine is the other one we are looking at this morning. Sonal is here to tell us more about that. Sonal, over to you.
Thank you so much for that. Well, the conference call was held yesterday on Mr. Welling's resignation, who was the MD of the company. They tried to allay investor concerns where they said currently search is underway for a suitable replacement. Ongoing projects won't be impacted because of this transition. They expect to execute current and upcoming projects seamlessly, and customer relationships will not be impacted because of the MD exit. They also said they are addressing the issue of attrition at senior levels with the HR, and company wants to raise equity in order to achieve capital discipline as well. However, brokerages are not very positive. Jefferies says they will not be able to, or it will be difficult to raise equity at current levels. They've cut EBITDA estimates, downgraded the stock to a hold, and cut the target price as well. Same is the story with Nirmal Bang. They've cut the target price to 4,600 versus 5,000 earlier.
Okay, thanks a lot for that. We're heading into the market opening now. The Nifty all set to open well in the green. There you have it, about 90 points higher on the index and holding on to 19,500. The Bank Nifty is up about 240 odd points, so gotten off to a good start. The biggest Nifty gainer this morning is Asian Paints, up 1.5% after that fall that we've seen in crude prices. High sensitivity to crude, so looking pretty good there. BPCL is up about 1%. Then you have, IT stocks which are doing well. TCS, Infosys, HDFC Bank is batting for the bulls. Tata Motors is looking good. Bajaj Finance, Dr. Reddy's, Adani Enterprise, a couple of other stocks that are in the green. Hero MotoCorp also in the green on the back of the new Charisma launch. So the street likes that. And it's not too far away from its 52-week high. On the downside, you have Divi's Lab, Axis Bank, Bharti Airtel, Power Grid that are all trending in the red right now. HDFC Life and SBI Life are also in the red. And Apollo Hospitals is a tad bit soft as well. Otherwise, it's not a bad-looking screen at all. The Nifty now holding on to 19,500 with ease, and the sensex is up over 300 points. Advanced decline ratio also well in favor of the advances. A lot of stocks like Soba developers, etc., macro tech developers reported good numbers this time. Equitas, Small Finance Bank. So all of those stocks are trending in the green, and I think that's what's leading the mid-cap index higher.
Well, that's right, Sonia. Let's take a few of those names then. RBL Bank, the quarter to deposit growth is the best in the last 8 quarters. Advances up more than 10% as well. That stock opens up with a gain of closer around 2%. PNB as well, they have come out with their update, and I think it's the first time that they've come out with an update. The deposits have risen by 9.65%. The advances are up by 13.5%. That stock as well opens up in the green. Since crude oil prices have cooled off, well, OMCs did see some correction in the last few days when it was spiking up. But now, HPCL is one of the top gainers from the broader markets. That's up 2.5%. Navin Fluorine, well, the search is underway for an MD replacement. Jefferies has downgraded the stock, so that one is sitting with a cut of around 3.5%. Marico had a bit of a run, but the quarterly update that they gave was a little bit tepid, so that stock is well on the losing end, down closer around 3%. HCG, well, there were talks that the PE promoter in there wanted to exit. Now they've gone ahead and acquired a cancer care center. That stock, in fact, is holding high with a gain of around 1.5%. Axis Gates, the ex-MD and CEO of Wipro, has been appointed as the chairman of that company, Mr. Nimuch Wala. So, that one is well up close around 5%. It's locked, from the word go itself. So those are all the stocks that are moving around as we speak. On the index, we had a bit of a dip. That dip has got bought into, added on the 19,507 odd mark. So it appears that the start is very, very good. We need to hold on to this. And with shorts in the system, maybe we could see a further relief rally. Prashant, what else?
No, absolutely, Nigel. So the start is very good, but what that also does is it kind of, if you're looking at it very short term, it makes it harder, right, what to do immediately, because you've got to gap up and then you're left wondering. Suzlon is the top volume traded gainer. It's up 4%, and we were talking about this in the morning. Almost $30 now, Suzlon. So it's coming up right there with huge volumes. Was up 5% in a down day yesterday. Zomato is up 3%. Stocks of course, crossed the 104 now. Cochin Shipyard is up 4%. Stocks at almost 1,100 now. Big gains, big volumes. There is HPCL. That's the only oil marketing company I can see. Maybe IOC and BP also will come up. But yeah, with that 5% drop, HP is coming up with a 2% gain. There is Share India, which is a broker. They largely are focused on the algo side, but that's up 6%. And we don't usually mention this at this point right at open, but it's got tremendous volume, so it's coming up with a 13, at least a 30, almost about 1,400 rupees now. Tata Investment Corp is up about 2%, and there are a few other names. But yeah, volumes beyond lower down are a little slow to pick up. I can see Safari, there is Bharat Dynamics, Lodha, which was a big gainer yesterday. Some of these stocks are coming up with gains. On the downside, Navin Fluorine is down a full 4%, 36.84. I think, of course, there is Jefferies, but I think there is also Kotak Institutional Equities, which has put out a note saying that the bigger worry is the downturn in the sector as opposed to the CEO departing. Marico is down about 3%, 552 on Marico. Those are the two big names which are coming up with cuts, which have got volumes as well. Otherwise, you got losses, but small, 0.5%, 3/4, and volumes are a little low. Sonia.
Also, there's this theme of falling Brent, right? It's across the board. So something like a SpiceJet is up in the green. Something like an Interglobe Aviation is doing well. You have all the paint companies that are up and about. Tire companies are doing pretty well. So just wanted to point that out. And something like a Suryodaya Small Finance Bank also reported a good business update this time. So that one, I think the last time I checked, Suryodaya is up about Yeah, 6.5%, so big move over there. So lots of traction coming into individual names.
And absolutely. And, we'll keep highlighting more as the day goes by. But yeah, for now, it's pretty solid going as far as the open is concerned, full 100 points. Sanjeev Prasad is now joining us, Managing Director and Co-Head at Kotak Institutional Equities. Sanjeev, good to have you with us here. Thank you very much. Let me just actually start with not a broader market view, but on a specific stock. Not so much about the stock, but your view on the industry, chemicals, and your note on Navin Fluorine, where you're pointing out the downturn in the sector as being a worry. What's the view there? And it's one of the few bombed out kind of sectors. Do you think it'll remain like this, or is there any light at the end of the tunnel?
Yeah, as of now, the sector is facing a lot of headwinds, namely two. One is really a global slowdown, which is resulting in volumes getting impacted. And you also have a temporary problem of very high inventory with the customers. So that affected volumes in 1Q FY24 that could sustain into the second quarter also. The bigger issue as of now seems to be industry profitability. That's gone down significantly, although of late you have started to see some improvement. And what has happened is China has come back into the market very, very aggressively, very aggressive on pricing guidance, which has hit the profitability across companies. We had a double whammy of somewhat lower volume growth. On top of that, you had really a negative impact on profitability. So yeah, that's what is going on in the shorter term. That could sustain for maybe another 1 to 2 quarters. The long-term fundamentals still look good of the sector. The only other point I would make over here is that, a lot of the stock price correction is more driven by earnings correction. So it's not as the multiples have gone down dramatically in these companies. So the challenge remains that valuations at least were fairly high on a near-term basis. And unless you see a sustained recovery in volumes and profitability both, I suspect the sector will still struggle for some more time.
Okay. By the way, the stock of the moment is Marico. Just pull it up. It's down almost, I think, 3% when I checked. Volume's also picking up. Mangalam was telling us how this quarter's numbers were not too great. In fact, the volume growth is in low single digits. And Sanjeev, good morning. This is Sonia here. I wanted your thoughts on what's happening in the consumption space, because across the board, the narrative is a slowdown in consumption, right? And some of these companies like Marico are speaking about it as well. What do you do with these stocks if you own them?
Well, unfortunately, this consumption slowdown has continued for fairly long. It started somewhere in the middle of November 2022, and it's almost a year now. And the commentary from companies, all on the ground channel checks, talks with dealers, suggests the same thing, that demand is still very, very weak as of now. And especially rural economy seems to be still having some challenges. So the hope is things will improve, going forward as the rural economy in particular starts benefiting from hopefully a decent crop output this time around. Monsoons have eventually turned out to be quite okay, despite all the fears in August of pretty bad monsoon. So hopefully with the elections pending also at the ground level coming up in the next few months, that should revive demand. But having said that, the challenge in the sector still remains that valuations are high, in the sense, if you see again the same point I was making about chemicals, most of the the stocks have sort of languished over here, but earnings have got cut. So in a way, the multiples have still stayed on the higher side. And there's one more medium-term issue which the sector will have to grapple with sooner than later. I think market is completely ignoring this aspect. Is the business models and the structure of market, will start becoming weaker as we go forward. If you see across sectors, any of the consumption space, you're starting to see more competition coming in. And you're seeing markets going from a 2 or 4 player market to, to more like a 4 to a 6 player market. So if that is the situation, then the current high profitability which the sector has enjoyed over the last several years and decades, that could start coming under some amount of pressure. So 2 things to keep in mind. You'll probably see revival going forward over the next few months. But at the same time, you could possibly start seeing some derating in multiples as the market starts realizing that this disruption is for real and it is here to stay.
All right. Hi, Sanjeev. Good morning. The last time we chatted, you were saying that there are segments of the market that are looking a little bit frothy, a little bit expensive, but there is some comfort on financials and healthcare. at current reckoning as well? Would you find more comfort out there? Because the broader markets have had this big party, which now seems to be coming off.
Yeah, I mean, if you look at the market, it's a weird market in the sense let's say the top 5-7 stocks haven't really participated. So if you look at the Nifty 50 as an example, it is up like 10% in the last 2 years. Whereas obviously the mid cap and the small cap indices have done far better. So that's the whole issue with this market, that the large caps have struggled, especially in the banking space, in IT to some extent, and I would put Reliance also in that same bucket. So about 40% of the Nifty 50 hasn't done anything for the last 2 years now. And some of the stocks have actually not done anything for the last 3 years, come to think of it. Whereas you are seeing this big party, in the mid-cap and small cap space. Some of it is, driven by a lot of incremental spending by the government in the investment sector. So some of it justified. But I suspect in many cases, the narrative is far ahead of the fundamentals. And I just hope that, that the narrative sustains. Otherwise, probably the stocks are going to struggle in a sense, either you see a swift correction, which is one way, some sanity comes to this market, or you go through a painful period of, time correction, as some of the large caps have done over the last 2 to 3 years now.
Yeah. Actually, add to that point, there was a note that you put out, very, it was I think, dark art of valuations, Sanjeev. That was an interesting one. So, and you basically were saying that looking at PEs and historical PEs actually is now serving little purpose. So you got to look at different methods, DCF, to see where valuations are, where stock prices are, what they're discounting.
No, there are two things. One is, the valuation methodologies don't change, to be honest with you. The only thing which changes is in the operating environment in which a sector or a company operated. That may change dramatically, in the future compared to what was the operating environment last 5-10 years. Case in point being, the consumption space I was talking about. We have seen a lot of, potential changes coming up. You will look at the premium motorcycle segment. You have pretty much a one-player market over there. That's going to become a three-player market. When you look at the paint sector, from a 3 or 4-player market, this is going to become a 6-7-player market. It's very unlikely the profitability is going to sustain at those high level that we have seen in the past. But somewhere the market is making that assumption that not only growth will be fine for the incumbents, I don't know, the market will just expand magically. That's what the market seems to be assuming. And profitability will also go down when you are going to see more competition. That seems rather, aggressive to make, aggressive assumption to make. So that is one point, that somewhere, the way we have looked at stocks historically, whatever were the right valuation metrics at that point in time, we need to probably looking at the new context for some of these sectors. And the second thing is, the point I was making in the report is start looking at reverse valuation, because they reveal a lot, in terms of what the stock price is discounting. And in many cases, it's clearly, the kind of assumption that is getting factored in is not going to play out for the next decade. But forget about, playing out the next 1 or 2 years, which is what the market is assuming, those assumptions to play out.
That the other, I mean, you guys are sort of titling reports in very interesting ways. That madcap rally, I think that caught on quite a bit over the last many weeks. Just one last question. Again, there was a report you put out asking the question, who's right? And that was basically about, all the selling by promoters and PE, something that, our team here is focused on as well. And all of that getting absorbed by investors. Is there an answer to it, Sanjeev? Because you've looked at it in quite a bit of detail.
Only answer for the market is time. Only time will tell who is right and who is wrong.
But what is...
so then later, keep in mind the fact that there is a lot of promoters selling, but in some cases it's more driven by strategic considerations. So if you leave aside certain conglomerates who have had to sell for whatever reasons, it's not as if there's a lot of promoter sales which are taking place. The selling is more being done by the PE guys, and obviously they have their own considerations apart from the price factor. Obviously, it is a no-brainer that valuations are high, and some of the PE guys would like to take money off the table. But obviously, they are also constrained by time consideration. Like if a fund is coming to a closure for 7-8 years, whatever the time may be, they're probably going to sell. So it could both be price as also other considerations.
Okay, all right. We will let you go on that note. Thanks a lot, Sanjeev, for joining in.
Thank you.
And thank you for joining us. That's Kotak Institutional Equities. By the way, there is a Morgan Stanley note on Zomato. That stock is up almost about 3% We'll try and get more details on that. But they talk about how there's an outperformance expected and there is a surge in profitability that they're looking at as well. So just keep an eye out on Zomato, up about 3.5% as we speak. But NLC India is on our radar. The stock has been an outperformer. It's up 90% in the last 1 year, so it's almost doubled. The company is planning to set up a coal-based power plant in Odisha, and they have a total capacity of 2,400 megawatts that they're looking at in Odisha. M. Prasanna Kumar, who's the chairman and managing director at NLC India, joins us now to talk about that. Mr. Kumar, thanks a lot for joining in. First, on this Odisha project, can you just tell us a little bit about the kind of timeline that you're looking at? What is the total capex outlay? We understand that the total capacity is 2,400 megawatts. How many plants are functional at the moment, and what's the current operating capacity?
Madam, NLC is having an operating coal mine at Orissa and Alavera. We are having peak rated capacity of 20 million metric tons. To take advantage of pithead power generation, we envisaged 3 into 800 megawatt Talavera supercritical thermal power project in stage 1, and in stage 2 800 megawatt, total 3,200 megawatt. Out of that, this for stage 1 to 2,400 megawatt, already 100% PPA has been signed. Recently, 400 megawatt PPA signed with Gridco. Earlier, already the PPA was signed with Tamil Nadu for 1,500 megawatt, Puducherry for 100 megawatt, and Kerala for 400 megawatt. So the total outlay is 19,202 crores, and we are in the process of acquiring the land for the plant, and already tendering process is on, and we are expecting to finalize the tender by December end. And the project will be completed in 42 months. So, and phase 2 also, 400 megawatt PPA is already signed with Odisha. And immediately after phase 1 award, we will award the phase 2 also.
And, so you said, you said stage 1, 100% PPA has been signed and 19,200 crores is the total outlay. And you'll finalize the tender by December end. So can you tell us when would all of this start contributing to your financials? And what is the prices at which you've entered into the PPA?
Madam, this is a central power plant. It is CRC regulated. So, but the most promising thing is that this will be the lowest because there is no transportation cost of coal. The tariff is expected to be both fixed cost and variable cost around 3 rupees. And it is guided by CRC tariff regulations. And they will start contributing from three financial years after the current financial year.
All right. Hi, Mr. Kumar. Good morning. So it's a big project that you're looking at. And as you said, since the coal is available, you're saying why not, set up our own facility and use the coal captively as well. Got that. Could you tell us about funding of this 19,000 crores odd? Phase-wise, how would it impact your financials FY24, 25, 26?
Yes, it's 19,400 crores. This will be distributed around 4 years, around 5,000 crores per year. In the initial year, it will be a little less, but subsequently, it will be around 5,000 to 6,000 crores per year in the next 4 years, next 3 to 4 years.
Okay, all right. Let's focus on a couple of other projects. The Gathampur thermal power plant, that is, I think, 3 units of 660 megawatt. That was expected to get commissioned, right? What's the update out there?
Actually, there are 3 to 660 megawatt units. The first unit we are expecting to declare COD by the end of November. And other units also we are trying to commission in the current financial year or at the first quarter of the next financial year. So by next quarter of the financial year, all the 3 units will be commissioned and commercial operation will be declared.
And what can it contribute in terms of financials?
Full operation, after full operationalization of Gathampur, it contributes around 500 to 600 crores to the profit of NLCA.
500 to 600 crores.
Yes.
Okay, got it. So, you've done a pilot green hydrogen project. Could you talk to us about that? I mean, what are plans there? Are you entering the space in a full-fledged manner? What will be the capex required for this?
Okay, initially, we are targeting to have a pilot plant at Neyveli, a green hydrogen generation plant. Already, the solar plant required for that green hydrogen plant is already commissioned. So we are going for a green hydrogen plant of 4 megawatt. That the electrolyzer procurement is under process. We are expecting that by the first quarter of the next financial year, we will be able to commission that pilot project. And seeing the based on the results, we will further expand our origin in the green hydrogen scenario.
Okay, that's on the green hydrogen space. You've also spoken about the Talabira thermal power project, right, of 2,400 megawatts. Can you tell us a little bit about that? Have you issued tenders for the same, and what is the status on that front?
That's what I told, madam. The Talabira, we are already issued tenders are issued. We are calling for price bid, and this will be finalized by December of this current financial year.
Okay.
All right.
Sorry, in terms of PLFs, can you give us what the trend is for Q2 and what is the expectation by the end of FY24?
In terms of PLF, our coal-based power plants are doing extremely well, madam. They are doing better than last financial year, and they are operating at more than 85% PLF. But in lignite-based power plants, there is some problem due to availability of lignite that is attributed to the non-availability of land. Now we sorted out all the issues of land acquisition, so we are hopeful that by the end of this year, we will be doing better than the last financial year.
Okay, all right. Mr. Kumar, the entire focus has been the financial health of the power sector itself. The lenders have been much better. So could you tell us about the collection efficiency from DISCOMs and what is the outstanding collections as of now for your company?
Because of the policies of Government of India, there is a substantial improvement in the collection scenario for the power generators, particularly after the circular dated 3rd June 2022. We have bill discounting and all other initiatives. The collection efficiency has improved a lot. In the last financial year, our collection efficiency was 90%. Against a billing of 11,486 crores, we could realize 10,359 crores. In the current financial years, it has further substantially improved. Now the collection efficiency is around 92%. And as on date, the outstanding dues are around 5,200 crores. But majority of those dues are less than 45 days billing. So there is a substantial improvement in the collection scenario, and we are hopeful that this will be further improved in future.
All right, we'll let you go on that note. Thanks a lot for joining in. That's NLC India, big mover in the last 1 year. They're setting up a coal-based power plant in Odisha, and they have a lot of, they're making a lot of progress in the thermal power plant space, even in renewable energy. So lots happening there. We'll slip into a quick break. When we come back, we'll be joined by Pralay Mondal, the Managing Director and Chief Executive Officer at CSB Bank, to talk about the company's Q2 business update. Stay tuned.
Welcome back. Well, the markets continue to hold strong as we speak. But let's get straight to our next corporate, CSB Bank. That's the one on our radar. The Q2 business update was good, aided by robust loan growth as well as healthy deposit growth. The bank's gold loan portfolio has also surged more than 30% in the past quarter. Mr. Mondal, the Managing Director and the Chief Executive Officer at the bank, joins us on the show. Hi, Mr. Mondal. Thanks so much for joining in, and always good to speak to you. Well, before we get to the loan growth, I want to talk about the deposit growth. That's been quite healthy. Could you tell us what is the incremental cost of funds in comparison to the average cost of funds? And are you seeing a bit of a switch from CASA to term deposits?
Good morning, Nigel, and thank you for having me on your show. what you're saying is correct, that the growth in CASA has been slightly muted compared to the deposit growth. And that is a systemic. I mean, if you look at most of the banks and the system, whatever we have seen so far, I think there has been faster deposit growth than CASA. And that is obviously when you have a GSEC at 7.2 plus kind of a scenario, it is bound to happen because customers will have better returns on deposits compared to CASA. Having said that, the core CASA, which is current and savings, will continue to grow for banks which has a full service franchise. For us also, we are building that gradually, and hopefully in the next few years, we'll continue to see a momentum on the CASA franchise as well. But right now, our core focus is to grow the balance sheet, grow the asset book, and hence the funding structure is extremely important. To that extent, we have been able to build up stable, sustainable deposit franchise, and that shows in our consistent growth in the last few quarters. This quarter also, we have grown around 21%. So that probably is sustainable in our view.
No, what about the cost of funds, Bazaar? That will be a little higher, right, in comparison to what it is. So give us a sense out there. Average cost of funds, as you've seen recently, in comparison to the normal averages. And also, what does it mean in terms of NIMs? I think for the year on average, you're guiding for around 5%. Do you hold on to that?
Yes. So you're right that average cost of funds is going up for the system as well as for us. But the good part is this is a transient kind of increment. Because what I see is generally it is going to flatten out, because we know that the GSEC curve, which is probably at its peak at this point of time, should start getting flatter too, and then have a slightly tapering by end of this financial year. So I think cost of funds will also follow that process. So overall, I think we would have had if you look at a quarter on quarter, I mean, that is not in public domain, difficult to give exactly a number. But somewhere, there will be anywhere between 20 to 50 basis points, somewhere between 30 to 40 basis points, kind of a dip that will happen, increase that will happen in the cost of funds. Having said that, this is probably the last quarter, because what it matters eventually is the NIM. And this would be the last quarter, hopefully, where we are kind of a bottoming out of our NIM, and we are pretty confident, given the size of our balance sheet, which is relatively smaller, we are able to manage that better. So to that extent, I think we are sort of bottoming out on our NIM. And from that perspective, I think we should be able to manage within that, somewhere around that 5%. I mean, even if it goes few basis points here and there, either higher or lower than 5, this will be the last quarter. But we will end the year between 5 to 5.5 for sure. So that's the perspective overall. On your specific questions on cost of funds, let me tell you that our cost of CASA has remained similar. Only the incremental deposits, now you know that it is not available anything below, for a 1 year kind of a deposit, anything below 7.5 today. So whatever that mix is growing at 7.5 to 8%, and sometimes even slightly higher. So to that extent, but that's very, very transient, and we have taken reasonably short-term deposits to ensure that we mirror the yield curve that is moving ahead. So that's broadly where we are now.
Okay. Mr. Mondal, hi, good morning. And hopefully that will be the case. Although even I remember at the end of the first quarter also, that was the expectation that, we'll perhaps see a bottom. But who knows, right? We're talking about higher for longer globally, and interest rates being generally on the higher side. So we'll have to see. My question specifically is on the portfolio itself, on the asset mix. You'd said that gold will still be the main, last time we spoke, gold will be the mainstay till FY25. How is that kind of strategy panning out? I mean, are you being able to, grow aggressively in other areas in a way which you're comfortable with? Or will the timeline need to be pushed out a little bit? The reason I'm asking that is because a few NBFCs, etc., we've spoken with recently over the last 1.5 months or so, have been warning about, on the retail side, some risks emerging, etc. I'm sure, you would have caught on to that as well. But what's your view? Gold, of course, practically is, in a way, a risk-free kind of a loan that you make. The credit costs are negligible. So my question is in that context. Go on, sir.
Thank you, Prashant. And absolutely right that on your first part of your question, that yield curve has continued to remain elevated for a while, especially because of some of the comments that has been made by Fed Fed representatives in the last few interactions. But if you look at today, some of the challenges which are facing last few days in terms of the job seen in US, that has been not so good. What data came yesterday. So overall, I think the bond yields has stepped off a little bit today. US bond yields from a 16-year high. And that is starting to reflect in our numbers today, but it is a day-to-day, it's difficult to say. And to that extent, from an inflation perspective, you can see that this gold, dollar index is also slightly come down today. And the overall scenario is looking slightly better today, but it's a day-to-day, so who knows. But what I'm reasonably sure is by the end of this financial year, things will stabilize, given the GDP forecast of around 6.3 and inflation, even if it goes up around 5.9, I think we will be pretty much okay, and we will see a slightly tapering off on the bond yield curve, and hence cost of deposit will hopefully start coming down. Coming to your second question on gold and assets kind of a mix for us, gold will remain elevated for us till FY25, and then it will start picking up. Nowadays we are all celebrating Indian story on the Asian Games with 81 medals yesterday. But this didn't happen in one night or one day or one quarter, right? So there was a time when we celebrate one gold medal in hockey and maybe one by, P.T. Usha or something like that. But today, out of 81, while we still get that golden, hopefully, in hockey, but because of the hard work that has been put and the process that has been followed, today, whether it is shooting or track and field, etc., everything is contributed significantly, and we are in the fourth position as a country and a very...
Mr. Mondal, I absolutely got that. We're running out of time, so just want to squeeze in a couple of questions on gold itself. That's the big trigger for the bank, right? You've seen a rise of over 30% in gold loans. Is that 30% growth year on year something that is sustainable, A? And B, as a percentage of your overall book, how much do you think you can take gold loans to over the next 1 year?
I think, as I said before, I hold on to that we will sustain that 30%. And hence our mix will remain between 45 to 50%, and that will sustain till FY25. And what I was saying, the preparatory work which you're doing on processes, technology, products, and given what Prashant just asked, that are we comfortable in suddenly enhancing the retail business? Answer is no, because if you are a new player and if you get into a market which is little heated up, obviously you will face challenges. So we are focusing on incremental customer acquisition, products, and processes and technology. Once that is done, then we will start picking it up. Also, we are focusing on SME and wholesale in a big way, and all of that we'll start seeing from FY25 onwards. Still then, I think gold will continue to be close to 50% of our portfolio.
Okay, and finally, on overall loan growth, what is a sustainable range for you? 20%, 25%? By the end of FY24, what are we looking at?
So as I said before, I hold on to that we will growing around 50% faster than the system. Now, obviously, in the systemic growth, there is a little bit of a noise because of the HDFC Limited merger. Now, I'm not considering that. The core growth without the limited merger, if you take it, on that, we will definitely grow by 50% faster than that. And hence, I'm quite comfortable somewhere around 25% kind of a number going ahead as well for the year.
All right, we'll leave it at that, sir. Thanks a lot for joining in. Appreciate your thoughts. That is CSB Bank. But let's move on to all the Cricket World Cup action. The ICC World Cup is starting today. It kickstarts today. There's a match that India plays on Sunday, and Cricket Fever is providing a big boost to the India travel industry. There are so many reports of, hotels being booked out completely, flights being booked out completely, and the rates surging through the roof. World Cup fever is surging in both hotel and airline fares, as I said. Prashant Pitti, the co-founder at Easy Trip Planners, joins us now to talk about that. Prashant, thanks a lot for joining in. This is a great time to be in the business that you're in, right? Given the kind of demand that we're seeing. But can you put some numbers to it? How have volumes been for the World Cup so far this week? And what does that compare, to in terms of an average that we've seen in the preceding months? Just to get a sense of how demand has been.
Absolutely. Firstly, thank you, Sonia, for having me on the show. Sonia, I mean, of course, this year we have a bigger festival, which is called as cricket. And thankfully it's coinciding with the time of other festivals like Diwali. And because of which the demand has been unprecedented. We actually did a little bit of number crunching, and we found out that the demand for this year is 72% more than compared to last year. Since the travel business is cyclical, if I give you month-on-month demand, it won't really matter so much. Hence, I'm comparing with the last year's same time frame, and the demand has gone up by 72%. And especially the routes like Delhi, Ahmedabad for the obvious reasons, have seen a surge of 89%. Then also Delhi, Srinagar is doing really well for the touristy reasons. And Delhi, Bangalore, Delhi, Bombay is up by about 30%. Delhi, Mumbai is up by about 20%. But the biggest spike which we are seeing is basically for Ahmedabad for the cricket match, which is due in the next week.
So Prashant, will be tough to find tickets? Tough to. I mean, is that starting to hurt at the margin? The prices? Is there a bit of
no, not really.
demand destruction as well, just because of how high prices have gone have risen too?
I don't think so. It is stopping people to go out and watch their favorite cricketers at the Mecca and Medina of the cricket, which is the World Cup. And the flights the hotels, the flights, everything is going chock-a-block. In fact, I believe that the airlines are trying to add up the newer inventory for certain routes. And hence, I don't think so it's eating up the margin in any sense.
Hi, Prashant. You could tell us what's the mix for the World Cup if you have to compare it? Hotels booking is obviously a smaller proportion of your business, but that's clearly scaling up. So how is that mix working?
So, well, at the time of listing, as I mentioned, that only 3% of our business was hotel business and remaining was flight business. Now it's almost about 10%. And given that how strong we are growing in our flight business, we have almost quadrupled our flight business. The hotel business has actually grown up by almost 10 times since the listing. And the numbers are continuing to grow. Even in the last quarter, our hotel business grew by 123%. So even though the percentages are low, but of course the team is feeling the heat of the World Cup and also the festival seasons. And we are going really strong around that. In fact, there are multiple other things which EaseMatrip has done lately. I don't know if you guys saw our cutting edge technology which we released last week related to smart voice recognition system. We have created in-house machine learning algorithm by which you can speak in Hindi, Telugu, Tamil to our voice bot saying that मुझे दिल्ली से बॉम्बे की flight जाना है, and then it would actually find you best alternates to basically take your flights or even book hotels and holidays as well. So it's a very multilingual NLP, natural language processing system which we have created, and because of this as well, we are seeing a lot of Tier 3, Tier 4 people pick up the demand since they don't have to type and they don't have to search themselves. They can just speak and utilize our services.
Interesting one, Prashant. And, I can speak for my co-anchors as well. Share market or not, we have been, closely tracking the story and the way you all have grown the company as well. So kudos on that front with regard to innovations as well. But let's talk about the market share. You've been consistently saying that your market share as well has been increasing from the time of listing. Give us an updated number and where is it headed?
I don't think so. Market shares and the prices are under any of my control or management's control. This is purely
But you could give us an updated number. Prashant, you could give us an updated number as well, according to your calculations.
So I think I've said this before. We are targeting profit of about 250 crores for this particular year.
Okay. Profit of 250 crores. Your market share, I think the last time we checked was around 11-12%. Is that right? The overall market share?
No, the market share is about 22% in OTA.
22% in?
OTA.
Okay.
In OTA.
But and what about overall market? I think you were saying 11-12%, right? Overall market.
Basically, about 60% of bookings are OTA, and remaining are either travel agents or captive. So yes, it cumulates to about 12-13% in overall space.
Okay.
Prashant, we've not seen, because of prices rising, right? I mean, a few months ago, there was all this talk of the government stepping in with some sorts of price control to, because it was becoming an affordability issue. Not heard anything lately?
No, I don't think so. There has been any action on that.
Okay. No talk as well, no discussion or feedback, or, I mean, nothing of that sort at all.
I mean, as much as you know, I'm aware of the same thing.
Okay. I wanted to talk a little bit about competition because, we've had a new listing, Yatra, and they were telling us about how there's a 20%, 25% growth that they're looking at. Make My Trip has seen their highest ever bookings. I understand that the pie is growing as well, but there's also a lot of competitive intensity. How are you combating that?
I mean, Sonia, we have been combating the competition since we were born. In the first 5 years of Ease My Trip, we only put 15 lakh rupees. While everybody had more than at least 200, 300 crores, which they addressed in the format of equity. So clearly, we know how to tackle competition. In fact, even in the last quarter, the results, as per the DGCA, the aviation industry grew by 19% year on year for the last quarter, while we grew by around 43%. So even though the competition intensity is there, we barely feel any heat of that. The company is growing. We have a very good virtuous circle because of which the company is winning. People come to us because we don't charge convenience fees. People stick with us because among all the OTAs, we are the only ones who run our own call center and provide customer the best services in the shortest span of time. And because of which our repeat transaction rate is 93%. And since my repeat transaction rate is very high, I'm not overtly dependent on marketing. And since I don't spend much money on marketing, I'm able to do my business profitably. And since I'm able to do my business profitably, I don't charge convenience fees. So this is the circle in which the company is growing. And, we barely feel the heat from the competition side.
Just one quick query, Prashant. I think promoter entity had sold some shares recently. Any further sale will we be looking at? Are you comfortable holding on to the stake that you have?
I mean, we met the time when we sold the shares we sold some percentage, about a few months ago. We are comfortable where we are at right now. It was basically, the reasons of sales was basically we had a liquidity crunch and we wanted to share our wealth with our future investor as well. As the company is growing, the future investor insisted on taking a little bit larger pie in the company. And for that particular reason, we had to sell the share.
So no further
sale? But again, even right now, we own 65% of the company. And if you compare us among the other internet companies, where most of the promoters in the other internet companies hold barely between 1% to 10%, we are still highly invested in the company.
So you'll not be selling any further shares, right? In this fiscal? Is there a plan? I mean, as you said,
I couldn't hear.
Will there be any further sale from promoter entity?
There is no plan of such right now.
Yes. Always good speaking to you, Prashant. Thanks so much for joining. Good times for your industry. And we'll all be cheering together for India to go ahead and lift the World Cup in the next 45 days or so. Getting back to the markets, though, they're still holding with gains of close to around 100 points approximately. It's been a good start. First 45 minutes, the bulls will be feeling good. Mitesh Thakkar is back with us. Mitesh, what would your advice be, particularly for someone who took a contra-long position yesterday? Should he take some money off the table? And your fresh picks as well.
See, my understanding is that long positions, at least we didn't advocate, and therefore, saying that if somebody took it, take profits will be unfair. I think I still have a negative outlook, despite the fact that we have a good bounce back today. My overall belief is that, Nigel, around 44,500, 44,600 on the bank nifty, and roughly around 19,650, 19,700 on the nifty, we're going to see strong supply emerge. So there is not much trading upside left from here. You can still go there, to those levels, if not today, then by tomorrow. But I would more be in the mood of selling at those levels rather than trying to buy and play this bounce back on the upside. So I'd avoid that, and therefore not a good idea for me to comment upon taking profits. But on the stock side, I have a sell on Marico, I think, it was making a fresh high a few days back. Now it's given a breakdown. So that's a sell with a stop at about 560 and look for a target of around 520 to begin with. And a buy on Emphasis, slightly risky, but I think, this can still is showing patterns on the hourly chart of reversal on the upside. So buy here with a stop at 2420 for target of around 2530.
Okay, some of these, government / defense / PSU companies have come back in a big way. So whether it's Bharat Dynamics, it's up almost about 6%. Cochin Shipyard is up about 5%. Mishra Dhatu is up 4%. And then something like Garden Reach Shipbuilders is also up 3%. So that whole space is doing pretty well. And then because of the fall that we've seen in crude oil prices, you have something like a JK Tyres that's surging now. So let's talk about some of these names that are buzzing. Mangalam is tracking Marico, which is down in the red, and Zomato, which is up in the green. So Mangalam, over to you.
Well, it looks like people aren't oiling their hair and ordering a lot of food. That's what the price moves are telling you. But for Marico, it's the second quarter update which has come in. It's a little soft on the top line. The company is talking about low single-digit volume growth, low single-digit revenue decline. And that's largely because demand conditions haven't changed from the first quarter into the second quarter, though they expect some improvement in the third quarter. What has done well, however, are the gross margins, and that the companies look to increase their ad spends. So as a result of which the operating profit has grown in double digits, but has been limited by the increased ad spends. Let's see how that goes. A couple of days ago, we saw a big move on Marico because of a brokerage upgrade as well. So some of that is coming undone. But talking about brokerage upgrades, Morgan Stanley has reiterated their positive stance on Zomato. In fact, they've called this stock as a tactical buy idea for the next 60 days, where they expect the stock to outperform their other benchmark indices. Why is that? Because the company has been outperforming on the profitability base in their core business in the last couple of quarters, and as a result of which they expect this to continue. Secondly, the second quarter and third quarter results will also address a couple of concerns that the street had, which was that of stagnating monthly transacting users. So they believe that, with the World Cup and the festive season coming up, that transacting users number should come up. And the platform fees increase that the company had taken has been well absorbed by the users as well, and the entire ecosystem. So all of this would mean that their EPS upgrades would come by and the stock would look relatively a little more attractive as well, as a result of which they have an overweight rating with a 125 rupee stock price.
All right, practical trading idea basically. Mangalam, thank you very much for that. It's Zomato, but IEX is the other one. Vivek is tracking that. Vivek.
Well, absolutely. It's the operational update that's keeping the stock buoyed. Now, what's actually happened is that the total volumes of the company, given the unseasonal rains, as well as, the strong temperatures that we saw a lot of demand coming up as far as the short-term power market is concerned. So total volumes up 13% on a year-on-year basis for the month gone by. And for Q2 itself, the volumes have come in at 26,533 million units, which is up 15% on a year-on-year basis. Even the day-ahead market, the segment that the company operates in, the average clearing price has gone up 11%, coming in at 6.23 rupees per unit. Now, apart from that, the company says that the demand momentum witnessed in August 2023 continued into September as well. And another important update, the General Network Access, the Indian Electricity Grid Board regulations, as well as the transmission charges sharing, all of these have been implemented from October 1st. The company believes this will add further traction to the short-term power markets.
All right, Vivek, thank you very much for that. It's basically holding 90, 100 points higher on the Nifty, and that's been the case since the word go this morning. We'll take a quick commercial break here, but commodities next with Manisha coming up on the other side.
Welcome back to Bazaar Morning Call. The big global headline has been the fall in Brent crude prices because of some issues in the US as far as demand is concerned. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, Sonia, we've been talking about the crude oil prices, but let's not take our sight off from the metal prices because we have seen very sharp declines come in for this one as well. I want to talk about copper today because that is seen as a barometer of, international demand scenario going forward. And we have seen prices here decline by nearly 5% in the past 1 month itself. This is MCX copper prices, where as well we have come off from 740 of a high just a couple of months ago to 700 on your screens. We did see prices slide below this as well. In the international markets as well, we started this year with $8,600 a ton. We are just about holding $8,000 a ton at this point in time. That is going to be a very strong psychological support coming in on the charts as well. Well, the strength in US dollar index, the interest rates on the higher side is weighing on. So is the higher treasury yields as well. But apart from that, it also is about the Chile copper output, which has seen a surge in the past month and past quarter, which is weighing on to the markets. If you look at the LME cash for copper right now, that one is at a discount of $70 a ton to the 3-month futures. And this is the highest discount that copper has seen in last 31 years. So that tells you that if you want to buy copper right now today, you're getting it at a discount of $70 a ton. So that's the kind of no demand that we are facing in the global markets there. Also, when you look at the inventories itself on LME, that's at a 2-year highs at 167,000 tons. This has seen an increase of nearly 175% in the last 3 months itself. So the inventories have been rising. We also are looking at a discount coming into the markets because there's no demand really. And apart from that, the producer countries like Chile and Peru are recording higher production there. The International Copper Study Group has come out with data that says that in 2024, they're anticipating new and expansion of smelters and refineries in Indonesia, India and US. So there is going to be high availability of copper in 2024 is the reason that they tell us that in this year, while we are looking at a copper deficit globally at 27,000 tons, next year is going to be a surplus of 467,000 tons. Is the reason that you're not looking at copper prices going anywhere on the higher side. We still are trading in the negative for the month, for quarter and for this year as well. If you look at the refined copper demand and output, while we are looking at stronger demand in this year and even better in next year, but look at the kind of output numbers that we're dealing with, almost double of what you are seeing in sense of demand. So that also tells you that this is a space, copper is a space, which will really look at perhaps a weakness in US dollar, Chinese demand coming back, manufacturing data getting better. Until that happens, there is pressure that can continue here.
All right, Manisha, thank you very much for that. So that's Copper in Focus today. We'll take a quick commercial break here. We've got the market, which is up nicely, 90 points, 19,530. On the other side, our special segment, it's the economy. My colleague Lata will get chatting with Ashish Vaidya of DBS Bank India and Suyash Chaudhary of Bandhan Mutual Fund to discuss expectations from the RBI monetary policy that is tomorrow. The decision is tomorrow. Stay tuned.